What's up guys, in this video I'll be talking about and showing that where I think Bitcoin is going next. So let's jump into the charts. Let's put this down my watch. Right. So as you can see, we had a massive fair value gap on the daily. Right here. We're filling it. Now sometimes at the lower time frames we tend to fill a little bit of it, I'll show you later that on the smaller time frames you might just slightly fill it, not completely, but on the larger time frames we tend to see a complete fill of the fair value gap. Like for here, there's a massive imbalance. When we were up here, you could tell we were going to take out this liquidity because there was no liquidity here. It was just resting orders. It had to be filled. There was so much orders you could see. You don't need to look at the order flow to fucking see there'll be lots of orders down here. And loads of people are like, oh, I think it's going down to this level. It's going down all of it. Look, all of it was filled. And beyond, like even here, and even beyond it. Because there are even resting orders below here. And I reckon we're going to take out this liquidity. Look at all this. So you can see here, fair value gap. Took it, swept to the downside, and that's what we're doing here. For value gap, I reckon we're going to push up a little bit above it, maybe even fill a little bit more of this fair value gap and break to the downside. As you can see, it's not fully filled this. This order box is still valid. And you can see there's a lot of volume needing to be traded down here, so I'm quite confident that Bitcoin is going down. Now the levels, I don't really trade off of specific levels like 26,208 for example, but I do believe we'll push lower down, and I caught most of the moves to be fair, but the reason why I lose trades is because I put a stop loss really tight close to my entry, which is a bad thing to do, especially on crypto. But anyway, so if I quickly close out of that, so look, as you can see, there would be resting orders below here where there are lots of points of swept, like where liquidity has been swept, and lots of where you can see the wicks have been right. So as you can see, there is a lot of buying pressure, but there's a lot of orders placed up above price and below price, and you can see it's been, as people say, support. Now that is an attraction to fill orders for larger amounts of money, so I believe we are just collecting orders, and that's why people say support and resistance, and support got flipped into resistance. Right, I'm back. I've been to the gym. Time has passed. I was passed out 3 times at the gym. Yeah, fucking cuts going insane. I lost 16 kilos, but anyway, a lot smaller. As you can see, the shoulders are getting pointy as fuck, which is not good, but we'll sort that out. Anyway, as you can see, under this liquidity, there are resting orders, and that's where people are putting buys and sales orders. Most of them would probably be putting sales. So this is how support and resistance is a thing, but not really. Up here, oh, this is resistance. Look, it hit it and hit it again. Oh, look, now it's went past it. Every time a resistant line gets hit, it gets weaker. It's because it's for a reason. It's trying to it gets taken up, swept. There's not enough liquidity, resting liquidity, and then let's say the third time, for example, which is not always the case, it completely passes through it, and that's for a reason. And it doesn't go completely shooting through, but just a little bit. It's because like a liquidity grab. As you can see here, it's taken it back down. It's also created an uptrend. As you see, we're in an uptrend. But I feel like we might grab some more liquidity up here. It's looking like it's like kind of topped out, like it's just done its little last grabs, but I still feel like it's gonna fill some more orders up here. Because look, there's fuck all orders up here. I mean, there's fuck all liquidity up here, and some resting orders. I find this on the fixed range showing that there's lots of orders but no liquidity, which is a good attraction. Like here, look at this, bam. Right, as you can see on the low time frame, on the 5 minute, kind of shot down a few time frames. I think I was on the 1 hour, I think. I tend to go 30, 15, 5, or sometimes 1, 15, 5, it depends. See, broker structure, fair value gap formed here. Let's say before this liquidity, I want to show, before this, fair value, right, so fair value gap is where it's in between these wicks, this wick and this. There's no wick here, so take it to here. Look, this is an imbalance. Look, price goes in, fills the imbalance, swept. You could have placed an order, stop loss above here, take profit but down here. Now that's a shit trade, obviously, but like theoretically, I do think we might go a little bit up to fill more of this imbalance. We might not. It's already been filled, really. That's the thing. On the lower time frames, like I said, this supports my thing, supports my idea. Fair value gaps don't get fully filled on the lower time frames. They kind of just get tapped into a little bit, here's the fair value gap. Right here, bang. For example, this is just shown as proof. Bottom to top, look. And you could have put an order here. It might have been equilibrium as well. Yeah, well, just shy of equilibrium. Order here, stop loss like here. Take profit. Fuck, I mean, this is massive. I mean, but so this is a small little like retracement in. So you'd have like a multiple take profits, because the thing is, this is too much of a small low. Like you can tell it's a good entry, but it might get swept a little lower to fill this. So you'd be quite skeptical. You wouldn't just have one take profit like all up to fill these imbalances, but you would have at least, like, let's say 3 take profits. The last one would probably be a little bit above this because there's a little bit of orders here. It wants to sweep these orders here. It wants this like resting orders up here. As you see, pushes through. If you let's say theoretically, if you place the trade here, 8.8, that would have been a good risk to reward. That would have been amazing. That would have been an amazing trade. But yeah, and you would have got tagged in. So here, bam, and that would have been such a good trade, because you could have hired the leverage, so you can only, like, let's say risk 2% of your account, and let's say you're on 20x leverage. Let's say that's nearly 40% profit. Let's say 800 quid, and then you could use the help of Market Cipher to see momentum, money flow, and the VWAP. You want to just see like the overall direction, just to see. And you tend to use this on the lower time frames, like the 5 minutes and the 15 minutes, just to see, let's say if you're going short, you want to see if price could potentially retrace back to your limit order. But don't just be like, oh, it doesn't look like it will, but there's an imbalance and it looks like all your other confluences are saying, put your limit order here, but Market Cipher doesn't. Fuck Market Cipher at that point. It's about, like, where do you genuinely think, and just use it as confluence.